Welcome to our channel. Today, we're diving into the fascinating world of trading, specifically focusing on the differences between spot trading and futures trading, especially in the context of cryptocurrency. Whether you're a seasoned trader or just starting out, understanding these concepts can significantly impact your trading strategy and success. Let's start with spot trading. In simple terms, spot trading involves the immediate exchange of assets. When you buy or sell a cryptocurrency on the spot market, you're doing so at the current market price, and the transaction is settled right away. This means that if you purchase Bitcoin today, you'll own it instantly, and you can use it or sell it whenever you choose. Spot trading is straightforward and offers a clear understanding of what you're getting into, making it an excellent choice for beginners. On the other hand, futures trading is a bit more complex. When you engage in futures trading, you're entering into a contract to buy or sell an asset at a predetermined price at a future date. This means you're speculating on the price movement of a cryptocurrency without actually owning it until the contract is fulfilled. Futures trading can be advantageous because it allows you to leverage your position, meaning you can control a larger amount of cryptocurrency with a smaller investment. However, this also comes with increased risk, as the potential for loss can be significant if the market doesn't move in your favor. One of the key differences between spot and futures trading lies in the concept of ownership. With spot trading, you own the asset outright, which can provide a sense of security and control. In contrast, futures trading involves a commitment to a future transaction, which can be exciting but also requires a solid understanding of market trends and risk management. Another important aspect to consider is the time frame. Spot trading is typically more suited for those looking to make quick trades based on current market conditions. In contrast, futures trading often appeals to those who are willing to take a longer-term view and can handle the volatility that comes with it. As you explore these trading options, it's essential to assess your risk tolerance and investment goals. Both spot and futures trading have their unique advantages and challenges, and the right choice for you will depend on your individual circumstances and trading style. Thank you for joining us today. We hope this breakdown of spot versus futures trading has clarified some of the complexities of cryptocurrency trading for you. If you found this information helpful, please consider subscribing to our channel for more insights and tips. Happy trading, and remember to always trade responsibly.